Thank you all for sticking around. Hope you all downloaded the app ArabNet Beirut to know more about today and tomorrow's agenda. Now, we have a very small video prepared by ArabNet about fintech. I will leave the microphone to Hadi Raad, Regional Head of Emerging Products and Innovation, SEMEA, at Visa, to talk about innovation in payments driving growth by Visa.
Thank you, ArabNet, for this video, because it's showing one thing, growth in fintechs as a result of payments innovation and innovation in general in banking. I'm not going to focus on the topic of fintechs, but I'm going to show how innovation in payments is helping growth, whether for the banking industry itself or even for the economy at a larger scale. Let me start by borrowing three interesting observations from digital industries across. ArabNet is an all-digital event, and the consumer is getting more and more digital. The consumer has digital as a priority in everything they do, whether it's on the internet or even in their everyday life. So let's look at a little bit of few observations of what the digital consumer of today wants, and then we'll take them to the payment industry. So one is that the fast lane is the new norm. Customers, people do not want to wait in queues anymore. Queues are part of the past. They want to move very fast. They want to do everything in a very fast pace. For example, statistics show that in 10 seconds of waiting until a video loads online, already 50% of the people, of the viewers, abort the transaction and move on. So they want speed. Same thing applies when we talk about payments. The process has to be very fast. People don't want to pay. They want to go through a commerce experience, and payment has to be very quick in the background. Second is simplicity. Simplicity is key, and simplicity has been the underlying disruption, innovation disruption for many technologies. Bringing in simplicity is a key thing for today's consumer. With lots of choice around, choice in everything, whether we're talking about social media. You have maybe 5 or 6 social media networks. Whether we're talking about buying stuff in the supermarkets, you have brands and brands and brands. You need to bring simplicity in order to differentiate. One great example for that is the virtual reality industry and how Google, through the VR cardboard, just simplified the experience with just a cartoon cardboard and a mobile phone. You can get into a virtual reality experience. And this shows how sometimes simple innovations can bring back technologies in a much larger scale. Again, taking that to payment, it has to be very simple. Paying online, paying in stores. It cannot be forms and forms of long information to be collected. Third one is interoperability. Consumer expects if they have a service, it works everywhere, right? I like the example of smart homes. Smart home technology is at a stage of, in a chasm where early adopters have already taken lots of smart home products. But for the technology to go into the mass market, it has to be interoperable. The devices that you get have to work with each other. For example, opening a lock over the internet, opening the door, you need then your lighting system to understand that you entered and to light the house. Then the music system, maybe to start playing soft music. The temperature of the thermometers to adjust based on who's in home, etc. So all of that ecosystem needs to work interoperable together, and innovation in technology has to take it that far. Same thing when it comes to payment. Consumers expect that the services that they use, if they use, let's say, in one country, it has to work globally. If they use maybe one day with one bank, it has then to work with others, financial institutions or services that they work. Interoperability is key. Now, how are retail experiences evolving with this type of consumer? Lots of innovation, technology innovation related to payment and commerce. Examples and examples like OpenTable, which allows you to pay from your app regardless of the time of when you have the menu. Disney introducing wearables, wristbands that you use across your experience in Disney, all the way, booking games, paying inside the park, or even opening up your hotel room. Verizon, with one of the supermarket chains in the US, introducing beacons and then recommendation engines on the app that takes you through where to go and shop in order to shop for a complete menu. So recommendations, it guides you through the different areas of the supermarket and until you get all your shopping needs for that particular menu. If we take it further, Amazon Go, where you enter a supermarket or a store experience where basically there is no queue anymore. You get your items and artificial intelligence immediately identify what's the item that was missed from the shelf. It calculates it and it gets into your bill, and you don't need even to go to a counter to pay because all of the payment happens automatically through your Amazon account. Other innovation by Amazon, the dash buttons. These small buttons that you see over here, you stick them into different places at home, and whenever you need an item, for example, this one on Tide, on the washing machine, you just click on it and the item gets delivered to your house. And not only that, it's advancing to a stage where you don't even have to click because it does the calculation based on how many people at home, and it delivers the items to you based on demand when you really need it. And then Alexa, you've probably all heard of Alexa, how they are innovating conversational commerce. So you just talk to Alexa and order what you want, as simple as that. So this is where the industry is heading, right? Payments has to be seamless, has to be really in the background. When we talk about Visa, we don't talk about a plastic card. We talk about an account that's in the background. And guess what? You don't need to remember what this account is. All you need to do is just authenticate at one point in time. Similar to when you call someone's mobile. You don't have to remember the mobile anymore. All what you have to do is to dial, right? It has to be as simple as that. It has to work everywhere, and it has to be secure, right? Because that's a key underlying factor, secure. And it has to work not only on plastic, mobile, but also wearables, the Internet of Things. Imagine every single device can become a device that can initiate or receive payments. And payments, again, has to be seamless in the background. You don't have to actually go through an experience. It has to be very smooth so that you enjoy your shopping experience, but not your payment experience. So, looking a little bit closer into this part of the world, it's no different, right? Maybe we're a little bit behind in certain areas in terms of adoption, but it's no different in terms of the consumer wanting to go into further devices. Mobile is very popular. Consumers, 40% of the UAE shopping consumer responded that they do that over mobile. Transactions online also increasing as part of internet users. So the region is definitely heading, obviously, behind different countries at different level of advancement, but the trends are the same. And looking into how, again, serving the consumer in different ways and different channels bring growth to the overall industry. So we looked at the data and compared the plastic-only consumers, the consumers that use plastic only for payments, compared to the consumers that use one digital channel, 2, 3, and 4. These being e-commerce, these being in-app payments on mobile, these being tap-to-pay experiences, and digital wallets like Visa Checkout and PayPal, etc. And the data was very clear. The more the users are using more channels, serving the user in more channels, the more the overall payments of the user are. So this is not only on those channels. This is the overall payments done by that user. And the logic behind it is that users are getting very used, right? It's an everyday habit. You're creating habit by following the users into all the channels that they use, mobile, in-app, online, wallets, etc. The more the user is used, the more they get used to paying digitally, whether in-store, in a card, in a plastic card, or digital e-commerce or mobile commerce on the internet. And this brings benefits to the economy overall. So digital payments reflects positively on the overall economy in countries. We've done a research with Moody, and the research showed that in 70 countries over a period of 4 years, every point of increase in payment penetration, digital payment penetration, reflected positively on the GDP in that country and in employment. So this is a common objective across all stakeholders in the industry, including the government, including the banks, including payment companies, fintechs, startups, etc. Because the benefit is clear, whether it is new business opportunities like what e-commerce opens up, or even efficiency in the transactions in store through digital payments, and even the transparency of the economy by getting away from gray areas. So our objective and goal is to displace cash. Everyone in the industry that helps in that is basically serving the purpose of going digital and displacing cash. The principles remain the same, the four-party model that we support with issuers, merchants, acquirers and obviously the consumer. And we are guided by the customer experience. The customer needs to be at the forefront. The standards that ensure interoperability globally, and the security of the transaction. And what we believe in is capabilities that enable our partners in order to innovate with us, innovate locally using global capabilities. I'm going to quickly go through some of the capabilities that VisaNet is helping in order to grow the digital payments. So risk-based authentication, or the evolution of one-time password authentication. You all know verified by Visa, the one-time password requirement. This is great for security of payments, but this is very big friction. This one-time password is like big friction in terms of a hurdle in terms of the consumer completing the transaction. So risk-based authentication does the calculation in the background in terms of behavioral checks, device checks, merchants checks, and provide a risk score to the issuer in order to judge, is a step-up password, one-time password needed, or we can go through. And guess what? Like 95% of the times, the step-up is not needed. You just go based on the safety of the transaction. Visa PayWave in-store, which is the tap-to-pay experience. This gets into the speed factor. Visa PayWave, which is contact, you don't have to insert the chip, and then you don't have to enter a PIN. It's very fast. It's like 50% faster than the chip and PIN. Again, for long queue businesses, this is great speed in terms of serving the customer. No queues. And it's as secure as a chip and PIN because it leverages the same technology. Push payments enable new type of experiences. P2P payments, peer-to-peer, or government disbursements, insurance, health disbursements, straight away to the consumer. Or in some countries, consumer to merchant, using mobiles on both fronts, and Visa using the push payment experience. In India, for example, they recently issued a law to stop some currencies that made a huge flow into digital payments. And services like that makes the like P2P on mobile, P2M on mobile, makes the process very seamless. The merchant can start accepting payments quickly on a mobile device rather than a point of sale. Visa Checkout, which is a frictionless online payment experience, replacing the need to fill forms online, addresses, address information, name, card number, etc., with a simple username and the fingerprint authentication method. And this is even evolving into how Visa payments are accepted online by opening up the platform to other partners like Android Pay, starting to use Visa Checkout as an acceptance mark to online payments. Again, for the simplicity of the transaction, merchants do not want 15 pay now buttons. They want one simple button, and then you can use that for several payment options. Visa Token Service, which is the technology underneath taking the payments to mobile and to all the Internet of Things, because it hides the account information and secures it and streamline the process of provisioning on mobile or other Internet of Things devices. Some of the live use cases include Apple Pay, Android Pay, Samsung Pay, and some in the region like EMBD Pay and others, Biblos here in Lebanon. So finally, we're working across the ecosystem to help digitize payments. VisaNet APIs are now open. Innovation can happen locally with fintechs or with banks using the capabilities of VisaNet with a common objective across us all is to grow payments in order to grow business, grow digital payments in order to grow business and the economy overall. Thank you for listening. Can I take questions? Or any question? Any?
We can take one question. Yeah, we can take one question.
Yes?
Considering Lebanon or Devon, is the market mature enough to accept such transactions, such digital cashless society?
Well, the market...
Yeah, because there's a perception in the market that even credit cards are not really accepted from consumers. They don't have education enough from the banks, from the industry, to shift from cash to credit cards.
So this is part of the equation, right? It's an ecosystem. You need to grow together. The issuance side, which is allowing people to be included and be able to use a digital payment mechanism, whether that is a plastic card or a mobile phone or. And on the other side, you need entities accepting digital payments. And the ecosystem has to grow together. But it's not enough. You need some incentives as well. Whether this is sometimes loyalty or this is sometimes some government initiatives in order to promote digital payments, maybe tax-related, maybe services-related. For example, in Dubai Smart Government offers a complete set of government services, including utility payments, telecom, water payments, parking, all of that in one app where you can pay very easily, very quickly through your mobile. These kind of initiatives build habits in the consumer, and the consumer get more and more used to using digital payments. Challenges are many, right? Like the infrastructure is not always as ready as you want it to be. We were talking about speed, right? And we were talking about customers don't want to pay. Hey, I'm like, the infrastructure in itself is sometimes a challenge in certain countries. So depending on where the country is, in certain areas you can move faster than in others. When? In the region.
Find a proper service.
Additional challenge to find a problem adequate personnel to do
Fee capabilities. If you're talking about capabilities, lots of Lebanese capabilities in the region, serving in the region, and there are capabilities across the region. ما في مشكلة capabilities. في مشكلة infrastructure. And sorry, I switched Arabic because of the question. So there is an infrastructure question in some places, in some countries, and sometimes regulations are not as easy to work with, maybe for certain understandable reasons, but still, it's a hurdle.
Question?
So one more?
One more, I guess. Can you give us examples of the visa development platform? What have you worked on in this?
There are lots of examples using Visa Direct, which is the P2P use case. There is a mobile location confirmation example. One bank used it, where you know that in some cases you have the challenge of if you travel somewhere and you didn't inform your bank, they start declining your transaction because they believe you're not there. So this mobile location confirmation API that banks can use automatically inform the user that this person is in this location, so then they take it into the factor of whether to decline or accept, and decline rates go down. All right. Thank you.